Welcome to Maverick Banking Edge podcast series, episode 6. On today's episode, we are discussing the challenges and opportunities within the wealth management industry. Joining us are Isvaran Swaminathan, Banking Technology Advisor, and Effie Pilaranu, Top Global FinTech and Technology Thought Leader, hosted by P. Venkatesh. So, let's dive right in.
Welcome to the Maverick Banking Edge podcast on wealth management. And today I have with me Effie Pilarinu. She has been a Wall Street professional turned into a fintech enthusiast, evangelist, author, and what you may call. And welcome to the podcast, Effie.
Thank you very much, Venkatesh. It's delight to be with you. This is an area that I'm passionate about, wealth management specifically and innovation.
I understand, and we are thankful that you participated in this report, Effie. We also have Ishwaran, a career banker turned into banking technologist, had been with a large Indian IT service firm and has worked with a number of banks globally on their various initiatives and transformation exercise. Welcome on board, Ishwaran.
Thanks for having me in the podcast, Venkatesh.
Very good, very good. Now, let's begin with you, Effie. While there has been a lot of comments, what do you think are the options available for wealth management firms to manage their growth and profitability given the current circumstances?
Great question. I mean, first of all, they both go hand in hand, optimizing costs, right? And at the same time, exploring for growth opportunities. It's always easier to look at the optimization of costs, and that is really done in several ways. First, I would suggest to look at processes that are time-consuming, labor-intensive, and automate those. A great example in wealth management is the onboarding of customers. Also, broadly speaking, looking at the IT architecture, starting from cloud, the data architecture, and modernizing that type of infrastructure, that is definitely not only absolutely needed to optimize costs and gain efficiencies, but it's also very necessary in terms of exploring growth through collaborating with other partners that we'll have the opportunity to talk about that are offering software as a service offerings, and that can allow wealth managers to grow in areas to serve customers that they couldn't serve before, or to go to markets that they weren't before. That really requires that type of infrastructure. So, as I said, it goes hand in hand in terms of re-engineering the architecture of the technology stack, and also strategically thinking where the growth opportunities are in different markets, different segments, and so on. So that's really the big picture.
Now, if I understood you correctly, you're saying wealth management firms have to look at their IT architecture, whether it provides flexibility for them to serve multiple customer segments, multiple markets, and capable of handling multiple asset classes. And that is the minimum that they should look into their infrastructure as a basis for handling growth as well as profitability.
Exactly. Again, it's going to be two birds with one stone, because they will be able to grow in wherever they strategically choose, and at the same time they will gain a lot of operational efficiencies and reduce costs.
Thanks, Effie, for that. And see, Ishwaran, Effie mentioned certain levers that the wealth management firms can look at. Now, in your view, where are wealth management firms currently in terms of leveraging those options which Effie outlined?
Venkatesh, I'll start with saying, what are the current status of the wealth management industry, and how then we can look at how these levers can be used, whatever levers that if we had mentioned. One is the last 3-4 years, the wealth management, there have been multiple developments which have been impacting the wealth management business. These have been spanning across the dimensions of macroeconomic, environmental, and also technology developments. Now, some of these developments are short-term in nature, which are driving changes in operating models by requiring fine-tuning of operating models. And some of these developments are driving long-term changes in the business, which are developing, requiring relook at the current business models with which wealth managers are operating. Now, the COVID period saw a lot of the central economies across the globe infusing a lot of liquidity into the market, which sort of impact the economic position in a post-COVID world. Okay, this period saw a high inflation and also high interest rate regimes. So this has had a temporary impact on the wealth management business. So the global net wealth had declined by about 2.5% in 2022, according to a UBS report. But one significant aspect of it is this wealth was more pronounced in the developed economies of North America and Europe, vis-a-vis as compared to emerging economies. Okay. And consequently, there was also a dip in the global assets under management, which has declined by about 10% again in 2022. Again, hopefully, this is only a temporary blip, and things should start getting over, because the current year 23 has already seen a lot of recovery in the markets and other stuff, which will help the assets under management to grow. But growth pressures will remain, and wealth managers need to look at how to achieve growth in this sort of a scenario. Some of these economic pressures will continue in the medium term, and wealth managers need to look at those levers that if he was mentioning about, for bringing in operating model changes and remaining viable in the long term. And some of these long-term changes which are being driven by factors like technology, wealth managers need to be aware of this and look at how to redefine business models to remain competitive.
See, Ishwaran, to add to what if he mentioned, we're essentially saying that wealth managers have to reckon the on-ground conditions in terms of declining asset under management, and also in terms of the lowering of the returns on those wealth portfolio, and look at how they can leverage those. And you are saying the economic environment is going to be a little more challenging in the road ahead. Is that correct?
Yeah. So it is in this kind of environment that whatever levers for profit optimization, cost optimization that Effie was mentioning become all the more relevant. There's also one more thing which I forgot to mention earlier, is that going forward also, it looks like the whole economic order is changing, and the rate at which wealth will go in the emerging economies will be much higher than in the traditionally rich economies. So there also, again, the wealth managers in the traditional economy regions need to look at these levers and see how to remain growth oriented and profitable.
Understood. Now, if I were to ask you what you are seeing as the major trends or drivers influencing the wealth management firms, what would that be, Ishwaran?
We already saw some of these things like declining growth and declining profitability, and what if he mentioned as the levers to look at them, tackle them. So I will not go into that in detail. So some of these factors which are driving long-term changes, we will discuss now. These are broadly defined by one as changing customer demographics as one. And the second one is changing customer expectations and preference. And third one is advancements in technology. Okay, so how to make the most out of all these changes? That is what the wealth managers need to look at now. When we talk about changing customer demographics, I mean, earlier the average of the age of the wealth management customer used to be, I mean, well into the 50s or 60s, but this is changing. And today, a significant population of the wealth management customers are in the 30s and 40s. More importantly, these are also people who have made their own wealth, okay, from sectors like technology and all, and who have not inherited wealth. Another important development, yes, there is a change in the patriarchal structure of family wealth holding. And today, it is estimated that women control about 1/3 of the total global wealth. Okay, they have a say in the total this thing. And women entrepreneurs and professionals also are estimated to be adding about $5 trillion every US dollars every year to the global wealth. Okay. So these two segments of the population, I mean, youngsters and women together have become a very important segment for the wealth management business, having their own preferences in terms of the investments that they would like to make and the kind of risk appetite that they have. And the wealth managers need to look at, I mean, new models, engagement models to engage with these customers. Okay. The second aspect that we were talking about is evolving customer expectations. Digital technology is one which has driven a lot of change in all the businesses in terms of new customer experiences. So published market reports, market research reports indicate that there is a similar expectation among wealth management customers also. So digital transformation needs to be an important aspect of IT strategy of wealth managers going forward. And also there are change in investment preferences of wealth management customers today. Today, we see a lot of preference for new age asset classes like ESG assets or alternative assets, which are coming into play. There is a lot of interest in this thing. So their wealth managers need to be prepared to offer these asset classes also to their customers to expand their business. These asset classes also provide an opportunity to wealth managers to expand their portfolio of discretionary portfolio size and also make more of fee income from the customers. Now, when it comes to the third aspect that I talked about, that is technology. So one thing is, one important development in technology today is the tremendous increase in computing power and processing power of today's technology platforms. Okay, so this has increased, put in a lot of this thing into the wealth management business too, and wealth managers need to look at how to adapt this into this. Okay, so this sort of increased computing power has started democratizing wealth management product offerings. Okay, so earlier personalized product offerings like single management accounts used to be accessible only to your very small customer segments, like ultra high net worth individuals or institutional customers. But now these are wealth managers are able to offer these personalized products at scale, okay, to a larger group of customers. And then the emergence of new technologies and advanced, like AI, digital, and cloud, and the developments that are taking place in them are also bringing in a lot of new possibilities for transformational development with long-term benefits. Okay, so these are the factors that will drive long-term changes in the wealth management business models.
Now, Ishwaran, that's a very broad coverage that you have outlined. And if I were to pick, you are saying the demographic change, the new asset classes, as well as on the technology side, on one side, the computing power has increased and new technologies like AI and cloud has greater adoption today, affording. And so wealth management no longer have to look only from the business angle, but from these angles in order to modify or reinvent themselves. Is that correct?
Yeah. One more thing probably I would add is the average profile, the profile of the average customers also changed. As I said, customers are becoming younger. There are more of women customers. So wealth managers need to also look at technology, how it can be deployed to meet the customer experience expectations of these customers.
Very nice, Ishwar. See, if he mentioned about the new asset classes gaining traction. Is it because of the changing demographics or even with the earlier generation of investors?
I would say that there's a shift in terms of values, societal values. So there's clearly and not only increased awareness about sustainability, the 17 SDG goals, and that goes across generations. I would say actually that our generation is feeling responsible for the mounting large-scale problems in the environment, climate, and even the societal problems and the governance problems. So there's clearly a shift. And we see that because policymakers and regulators have already caught up and continue to develop policies and reporting standards and regulations around ESG. And therefore, on the one hand, wealth managers are now obliged to catch up with these reporting needs and prepare. Again, they need to prepare their data architectures to be able to report, to be able to create ESG compliant products. And that again goes to adding more products according to what the customer wants, and at the same time doing it in an efficient and compliant way. But it really goes beyond that. Why? Because there are actually investment opportunities in this area. Think of all the energy transition technologies and companies and businesses in that area. Think of the companies that are focused in energy storage, a very important area of innovation and a great potential investment area, climate tech. So it's not only about putting your money, voting with your money as a customer for sustainability, doing something nice or impactful. It's also capturing growth opportunities in these areas as we develop technologies to solve these problems. And I would say that when we look at alternative assets, which by the way, right now, they're very small part of the overall portfolio allocation globally, even for high net worth individuals. But we're seeing a clear trend of increased accessibility to those asset classes. And those are, private credit, private equity, hedge funds, digital assets, cryptocurrencies, and more. And we're seeing offerings that allow accredited investors, but with much lower minimums of 10,000, of 20,000, instead of, millions, to be able to invest in these asset classes. And it's also the fact that there's less information asymmetry in the market. And wealth managers can offer knowledge in these areas and advise on how to include these in the portfolios. And they're very interesting, both from a diversification perspective and from a higher return perspective. So both of these classes are up and rising and very interesting for wealth managers to consider from their in terms of their growth strategy.
Now, essentially, Effie, you're saying ESG has been driven by three factors. One, awareness of the investors relating to ESG. Second, regulatory standards emerging on those. And third, number of companies which have come in towards the clear tech. And therefore, these are the three factors influencing them. And when it comes to alternate assets, you are saying the traction is because the threshold value for those investing in those assets has come down. And there is greater awareness about the number of products which are available in that area. And that is the reason for the traction. Is that correct?
It is correct. And let me add to the point of the alternative asset class. It's a much bigger asset class than the public markets, because it's huge. It's got all, credit products, all fixed income products, all structured products. It's so much bigger and was basically accessible only to institutional investors and ultra high investors. So there's a great opportunity there.
Understood, Effie. What's needed to implement ESG and alternate assets, Ishwaran?
Yeah. As Effie very clearly mentioned, I mean, these are two separately distinct asset classes which are completely different from the existing asset classes. So these require special capabilities from wealth managers in terms for advising on and managing these assets. Now, these capabilities are both technology platforms and also skilled manpower. Okay. Now, Effie mentioned about how information is very important on this, how there is very little information available on this, and how wealth managers need to train to give information on this. So there is a lot of important systems are required to collect data, to analyze data, okay, to configure and launch products relating to ESG or alternative assets, and to identify investment opportunities which conforms to these profitable investment opportunities, and track performances relating to this. Okay. If he also mentioned about regulatory reporting requirements, there are very specific regulatory reporting requirements and client reporting requirements to these factors, and they would require new systems to address these things also. Now, looking specifically at alternative assets, they carry very special risks, unlike others, in terms of liquidity, pricing, and regulatory compliance, etc. So, which require skilled manpower with the wealth managers to manage these assets. Okay, and these alternative assets are also not traded in public markets. Hence, they require their own custody and trading ecosystems to manage these things. So wealth managers need to acquire capabilities both in terms of technology platform and also skilled manpower to start offering these products to the customers.
And in your view, will it be a build or buy decision there?
It could be a combination of both. It depends on the individual cases. I mean, it's a classic case of whether build or acquire this thing. So each company will have to look at its own option of how to do it. Only thing that I can say is there have been a lot of instances of acquisition in these areas, okay, focused towards acquiring capabilities in these areas. Because one thing is these specialized tech platforms have been developed by a lot of startups, okay, and fintechs, which are specialized in these areas and who also have specialized talent. So it takes some time to market if we have to start this in-house. So there have been cases where there are a lot of this thing, but it is not that nobody is developing it in-house. There have been also cases where wealth managers has decided to do it in-house because then they can offer their own version of the product, their own flexibility in offering these products. That's also required. So the wealth managers have to take a balanced view between these two options and look at what is beneficial for them.
I want to add to what Ishwaran said, that we've seen, especially in the US, which is a more mature market in many aspects, that a lot of the fintechs that Ishwaran mentioned, they initially work as partners with the incumbents, the big wealth managers, and then maybe they acquire them or make a big investment, because as we mentioned before, the innovators in these alternative asset classes are very specialized, and it's not low-hanging fruit, and therefore that's the way that it's going in the market. Instead, in terms of building, typically it's the big wealth managers that have gone down the route of building rather than partnering, acquiring, and complementing.
Understood. Understood, Effie. Now, Ishwaran also mentioned that AI adoption is everywhere and including on the wealth management side. Typically, what kind of use cases the wealth managers have for AI adoption, Effie?
I mean, let's be clear, because we are in an era where we feel that there's a lot of AI washing instead of greenwashing, right? And honestly, in financial services, and specifically in wealth and asset management, AI is not new. It's been used for all sorts of purposes, especially in investing and trading, running scenario analysis, optimizing portfolios, predictive analytics. These are areas that traditionally wealth and asset managers have been using AI. So the question is, what's happening with the advancements in AI, which are really in the machine learning area, and generative AI is a subset of the machine learning area. And I would say what I'm seeing now in the market is there is a focus in two main areas in using the advancements of AI. One is to support financial advisors, to support them in their communication with customers, in terms of being able to really personalize and customize their information and advice to them. I would say that it is in contact centers. Again, it's the advisor or the service provider to the client. That's one area. And the second big area is in terms of market research, market analysis, market intelligence. That is an extremely important area, and there's a lot of growth already. Let's remember that Gen AI, hit the market. It's just been, let's say, 1.5 years, and already we are seeing pilots and offerings in the area of, for example, how can we look at earnings calls, at financial reporting of public companies, and really gain insights, not in a week with 3 or 4 analysts or a team of analysts, but in a couple of hours with the help of a machine and one person that's overseeing that. Those are the areas. And if I were to mention, 1 or 2 names, I would bring to mind, what JP Morgan is doing with the Tiffin Group, that is they're collaborating to use AI to really, again, help advisors and maybe in the end then customers with advice, portfolio optimization, understanding alternative assets, wealth management in the workplace, all those areas using generative AI. And I would say that this is not just a technological breakthrough. It is also a breakthrough in the customer experience, because think of it, we are in an era where the interface of the internet, of how we engage with an app, with a service, with the internet, is changing. It's conversational, it's interactive. So we can envision that, and wealth managers, are starting to realize this, that we're moving to a world where we will be talking to the wealth manager, whatever the interface, and having an interactive conversation versus just sending one-way information. So this is extremely exciting, along with, of course, the risks that are going on. But these are areas of opportunity. Where there is risk, there is opportunity too.
Absolutely, Effie. And you're essentially saying two features of the AI help. One is the conversational part, and another is where it can crunch a lot of numbers and data and therefore bring the right insights in much less time. Correct? Thank you. Now, Ishwaran, you also mentioned that along with customer demographics, the expectations also have changed because of changing the gender as well as age group, age profile of the investors classes.
Yeah.
Can you highlight what those changes would mean to your wealth managers?
Yeah. One aspect of this we have already discussed. I mean, if we talked about this new asset classes of ESG investing and alternative assets, of course. So I will restrict myself to the second part of it in terms of what are the kind of customer experiences this new demographics bring about. Now, as I mentioned earlier, published reports show that there is a lot of high degree of preference for digital channels and tools by wealth management customers. Okay, they also indicate that they just don't want one mode of engagement, just digital alone. They still want to continue on a dual mode of engagement. That is, they want both advisor-led engagements and also digital channels to be available to them. Now, which channel they would prefer for this thing depends on the type of transaction. It also depends on the age of the customer. The younger the customer, the inclination is more towards the digital channel. And it also depends on which end of the wealth spectrum the customer belongs to. That is the lower end of the wealth spectrum or the ultra high net worth individuals or somewhere in between. Depending on that, these preferences vary. So taking all these into accounts, now digital transformation becomes a very important part of IT strategy for wealth managers to meet new emerging customer expectations and experience expectations. Now, if we look at, now the digital technology should be leveraged to both enhance customer experience and also increase advisor efficiency. Okay. If we talked about how things like artificial intelligence can all bring in about internal efficiencies also in terms of enabling advisors. Okay, so digital technology should also be enabled towards this. Okay, so looking with these basic goals in mind, there are broadly, I would say, three components to any digital transformation. Okay, one would be digital channels. This would involve reimagining every customer journey. Okay, and seeing how it can be made available digitally through digital channels and also through an advisor. Either the advisor interacts with the customer either in person or virtually through, again, another channel. That is another thing, that possibility. Okay. The second aspect of this digital thing is advisor enablement. Okay, as I said, because digital technology should also be leveraged to enable advisors to give effective advice. This would involve digital tools to advisors. Thereby, they can get a holistic picture of the customer's portfolio and also the next best action that is advised based on the predictive analytics that Effie was talking about. Okay, they get an access to it at any time, at any place. Okay, and they are also able to execute transactions on behalf of the customers at any time from any place. This is the second important aspect of a digital transformation. The third one is about omni-channel experience. This should ensure that the customers get a uniform experience across channels. The channel doesn't depend on what is the kind of customer experience that they get. So they get a uniform experience across these different digital channels. And also they are able to continue move from one channel to another seamlessly. Okay, carry on parts of transaction in one channel and then continue it in the other channel. So these three will be important components of digital transformation.
Now, Ishwaran, you're essentially saying people have to digitize most part of the customer life cycle so that, and they make it either purely digital or has a human interface embedded as part of that. And in addition, you are also saying the agents or advisors have to be enabled both with regard to their portfolio as well as market information so that they can advise appropriately to the customer.
Yes, this becomes very important because today in the wealth management space, the customers are from one end of the spectrum to the other, from very young customers. You have very senior customers. You also have, in terms of the wealth holdings also, okay, the mass affluent customers to the ultra high net worth individuals. So it has to cater to every preference.
Now, Effie, what do you think we are heading into on the wealth management side?
I mean, I would say that the wealth management has been behind the digitalization journey compared to retail banking, for example. Of course, wealth management is a much more sophisticated part of the business. Having said that, from all that we said, now it's broadening. You can serve more customer segments. You can offer more different types of products. But wealth managers are called, if you want, from the market to find new ways to develop relationships with their customers while keeping up with digital transformation and integrating advanced technologies. So it seems complicated. However, the opportunities are immense, and wealth managers have to move fast, because what was the differentiator 2 years ago is not anymore the differentiator. It's become normal. Everybody has, let's say, video onboarding, right? KYC. A couple of years ago, you were the leader. And this goes for everything. So one has to be awake every day. You cannot pick a technology stack and rest assured that this is going to be your differentiating factor for the next 3 years, not even for that. So it's a continuous journey, and it's an exciting one. The trick for wealth managers is to look at their technology stack and align it with their strategic objectives that, of course, have to take into account what Ron mentioned before. It's the macroeconomic conditions, the challenges of the customers, the preferences of the customers, the changing values of the customers, and how to solve that. So it's a dynamic problem, and that is why it's very important to have trusted partners that understand both technology and the business and are companions for life, so to speak, because it's never done. This is not a project. This is not a roadmap until, the next, let's say, 3 or 4 years. Typically, that's how we think. Yes, you can't think and plan further than 3 years, but you have to be updating it continuously. So that is what I feel is important. And the opportunity and the differentiating factor. It's like us individuals, we need to be upskilling, we need to be learning, we need to be adapting, we need to be using the new technologies, and that's how we will be never replaced. If we take that thinking to the wealth management space, it's continuously looking for what the differentiating factor is while keeping up with the transformations that are happening.
Thank you so much to both of you for being there. And I guess it was worth the time.
It was my pleasure.
Thank you.
It was a great pleasure.
Thank you.